have Varun, our colleague, standing by to give us an overview of what the brokerage houses like Bernstein, Kotak and MK are saying about the entire GST reform and what are the sectors and stocks on radar for them. Varun, over to you.
This GST rate rationalization will actually impact the economy as a whole. It will impact the GST collection. It would impact the overall GDP of the country. But yes, it would give a consumption boost, and that is actually going to help sentimentally at least the markets today. Now, Bernstein says that an optimistic case of this measure will result in a net consumption boost of around $13 billion, and also it can push the overall central deficit by around 20 basis points. But a capex cut of around 5% will limit the overall impact to around 5 to 10 basis points. This can also lead to pressure on the rupee. But yes, the domestic themes that would actually do better. The overall fiscal deficit, which was expected to be around 4.3, can go up to around 4.4%. But yes, the overall losses of GST, which can be to the tune of around 1.57 lakh crores, that would be divided between the center and the state, and the center could actually take the larger share of the losses that could happen because of this overall GST rationalization. But they believe that the equity markets will actually cheer this overall fiscal push, and a recovery in demand in the economy will actually push the private overall spends going ahead. Also, they expect Nifty to continue to expect higher double-digit single-digit return for the rest of the year. They are overweight on consumer, equal weight on utilities, and underweight on industrials. Now, Kotak says that it could actually impact the overall consumption theme, and the net rate may provide 2.3 lakh crore boost to the overall economy, and this would be positive for autos and durables, although the cement sector will see limited benefit. And also they are saying there could be some price changes in the coming days by some of the companies. Now, MK says that this will actually lead to overall losses of around 0.4% of GDP for the government. So, and also this will impact the CPI inflation to the tune of 50 to 60 basis points. Also, you have Motilal Oswal, which says that it will actually reduce the retail prices by around 4 to 5%, easing overall household budgets. And they say that companies like HUL, Britannia, Maruti, Ashok Leyland, Voltas, these are the companies which could actually benefit. And also Antique says that this will actually provide a big consumption boost to the economy, and the rationalization coupled with the with other consumption tailwinds could actually drive the second half recovery, supported by the overall strong festive demand. So it's a boost for the economy. No doubt there could be some impact on GDP, there could be some impact on GST collection, but yes, it will actually lead to a consumption boost and sentimentally positive for the markets